Okay, last problem for exam 5. You know you're going to have a balance sheet. I've been telling you you're going to have a balance sheet. The key to doing balance sheets is knowing what an account is. Is it an asset? Is it a liability? Is it a stockholders' equity account? Because if it's not one of those, it doesn't go on the balance sheet, right? It may go on the income statement. Revenues and expenses go on the income statement. Dividends go on the statement of retained earnings. So, important to keep in mind what is what. You'll have a list of accounts. I'm not going to say they'll be in the same order or the same kind of accounts, but you'll have a list of accounts. Your mission will be to be able to look at those accounts, whatever they are, and determine, is that an asset, liability, or an owner's equity account? If it is, it goes on my balance sheet. If not, I'm just going to ignore it. All right? It's also going to be a classified balance sheet, which means you have to be able to separate them into current liabilities and property, plant, and equipment, and current assets and property, plant, and equipment, and current liabilities and long-term liabilities. So understand that distinction and where they'll go. But you should be fine. So I've gone ahead and set one up, right? Assets. I'm not sure where my property, plant, and equipment is going to come in, so I kind of left that blank. But you know it's going to be assets, liabilities, stockholders' equity, current assets, property, plant, and equipment, current liabilities, long-term liabilities. And then you'll total everything. So even if you can just set it up so that you can show me I know what a balance sheet looks like, maybe you get some of the accounts right in the wrong spot, you're still going to get a pretty good amount of credit for knowing, assets, liabilities, stockholders' equity. And if you can just set this up, you're going to be a long way towards figuring things out, because a lot of times once you figure it out where they're going, it's not so hard. So what I'm going to do is I'm just going to kind of mark what things are. Alright, so I'm just going to read each one. And you know what? If it doesn't go on here, I'm just going to draw a line through it so I don't look at it again. Alright, current portion of note payable. So we learned that anything payable within a year is a current liability. And so that would be your accounts payables, your unearned revenues, your note payable, whatever note payable, or if you have a long-term note payable, but some of it's due within the next 12 months, that's called the current portion of the note payable, and those are all current. So this is actually a current liability. We want to keep that. Cash, that we know is our most liquid asset, so it's a current asset. Accounts receivable net. So accounts receivable, we know are current assets. On some balance sheets, you'll see them say accounts receivable minus allowance for doubtful accounts equals net account receivables. In this case, they're just telling you, here's your net accounts receivable. Right? So that is a current asset. We've got supplies. That's a current asset. All right, these are all kind of in somewhat order. I'm not going to promise you that on your exam. Prepaids. So prepaid assets, current assets. So sometimes you pay your insurance up front, you pay your rent up front. Maybe utilities, I don't know. Anything that's prepaid is an asset that you're going to use up. So that's an asset, and so that is a current asset. But I skipped 900 for supplies expense. So this is great. So expenses don't go on the balance sheet. Supplies, the asset supplies, yes, but expenses, no. So prepaid goes on there. But insurance expense? No. That doesn't go on there. All right. Sales returns and allowances. You may recall from back when we did merchandise type organizations that their revenues are called sales. And sometimes people return stuff and we need to deduct that. Sales are revenues and sales returns and allowance are contra revenues. Revenues themselves, actual revenues and the contra accounts that are associated, those go on the income statement. So sales returns and allowances, not even going on here. Office equipment, for sure an asset, and that is a property, plant, and equipment. Depreciation, expense office equipment. So this is tricky. Can't believe I was this tricky with people. Depreciation expense, office, so expenses, no. Expenses, no. Those expenses go on the income statement. Note payable. So this is like the long-term portion of the note payable. So certainly that's a liability. Here is the accumulated depreciation. So this is what goes with that office equipment, the accumulated depreciation. That's what goes on the balance sheet. That's what we subtract from the cost to determine our book value. So if you see a depreciation expense, don't touch it for a balance sheet. If you see accumulated depreciation, totally put that on a balance sheet. All right, so that is P, P, and E, and that's what we call a contra asset. All right, P, P, and E. So that stays. Accounts payable, oh yeah, accounts payable, those are current liabilities. We need that. Sales revenue. So if you see revenue, fee revenue, rent revenue, whatever, because things can go either way. If you saw prepaid rent, that's an asset. If you saw rent revenue, that's a revenue. So this is not going on. All right. However, if you see this word unearned, right, that means somebody gave you money up front to do some work and you owe them work. Whenever you owe people things, that's a liability. So if you see service fee revenue, that's a revenue. If you see unearned service fee revenue, that's a liability. So we're going to call that a current liability. Service revenue. No unearned in front of that. So we're going to draw a line through that. Capital stock. Oh yeah, capital stock, that is an owner's equity account. Retained earnings, that is an owner's equity account. Right? Dividends, no. I think people get confused with dividends because dividends go on the statement of retained earnings. So because I think people get a little confused with that because retained earnings goes on the balance sheet, and they know that dividends are sort of part of that because they go on the statement of retained earnings. They tend to want to stick dividends on the balance sheet, but they don't go. Dividends only go on the statement of retained earnings. All right, so we scratch that out. Inventory is totally a current asset. I mean, it's certainly great. Building, totally a property, plant, and equipment, right? Accumulated depreciation, building. So that accumulated, yes, I need that in order to calculate my book value. And that's that contra asset. And depreciation expense, so there you go. There's another tricky one. That does not go. Land, oh yes, we need land. That is a property, plant, and equipment product, what the building's sitting on. All right, so I've gone through all the accounts and I figured out what they are. So that's the thing I would say you need to do first. And now you're ready to put it back together. And so you find all your current assets, and it just so happens that on this example, they're all kind of gathered here. Oh, well, here's one down here, inventory. So go through and find all your current assets and put them first under current assets. In real life, we would set up our current assets in order of liquidity, but to be honest with you, as long as you get them under current assets, I'll give you full credit. So current assets are cash, right? And that was $2,500. Current assets are accounts receivable net, $750. Current assets included at inventory, which is $7,200. So I'm putting them in order of liquidity. If you do the same, that would be awesome. Supplies, right? Supplies, $250. Prepaid insurance was $300. So then we've got total current assets. All right, and that's 11,000. All right, so we got that. Next is the property, plant, and equipment. I'm going to just abbreviate it, PP&E. You can too. So the first thing you would put down would be your land, and it's 5,000. Right. Next, you put down things that are depreciated, and you calculate the book value, right? So we've got this building, and we've got this office equipment, right? So the building is 100,000 less accumulated depreciation office equipment. We put that on the balance sheet, right? So we're going to have building 100 less accumulated depreciation 5,000 equals 95,000. Then we'll have office equipment 25,000 less accumulated depreciation of 5,000. Seems to be the number for depreciation. Gives us 20,000. So we'll have total PP&E is 5 and 20 is 25 and 90. That gives us 120,000 in PP&E. So then your total assets are 11,000 plus 120,000, or 131,000. All right. So now we know our liabilities plus stockholders' equity better equal that. So hopefully that's what will happen. And we've listed our current liabilities, so we'll put them first. And that was current portion of note payable, accounts payable, and unearned revenue. All right, so current liabilities include current portion note payable 1,000, account payable 4,000, and unearned revenue, which was 1,000. So total current liabilities equals 6,000. Next we have long-term liabilities, which there was just one, note payable, and it's 20,000, right? And so total, I mean, in theory you could have more bonds payable, things like that. Total long-term liabilities 20, right? And if you add 6 and 20, you get total liabilities 26,000. All right, so we need to take our stockholders' equity, which was capital stock of 100,000 and retained earnings of 5,000, and total stockholders' equity equals 105,000. All right, and we add these two, right? Total liability plus stockholders' equity, 131,000. All right, so we balance. I know on a couple of exams, some people don't total things, and that's the important part. You'll get counted off. Even if you had everything in the right spot, you do have to show your totals. So that's it. Make sure you know which accounts are assets, liabilities, and owner's equity. Make sure you know what are current and what are property, plant, and equipment, and long-term. But you can do this. Good luck.